I invested $5,000 across 3 YieldMax ETFs, and what's happened so far in 2025 genuinely caught me off guard. These funds are built for aggressive income, and the returns have been shocking. In this video, I'll break down which ETFs I picked, how they have performed, and exactly how much income this portfolio has made me so far. And just a quick disclaimer, this video is for educational purposes only and reflects my personal opinions and experience. Let's start with the first position in my YieldMax portfolio, MSTY. This ETF is linked to MicroStrategy, a company known for holding massive amounts of Bitcoin. That exposure makes the stock extremely volatile, and that volatility is exactly what powers MSTY's income engine. YieldMax uses synthetic covered calls, so more movement, the more premium, but also the more risk. These funds are already considered very high risk, and that's why I'm tracking the performance closely. So let me show you what this has looked like for me. Looking at my tracker, there is a lot going on here, but I'll break it down. I started with 2 purchases, $1,075 initially, then added $700 for a total out-of-pocket investment of $1,775. Since then, I've received 6 dividends, totaling about $679 before taxes, but since I'm investing from outside the US in a taxable account, my brokerage automatically withholds a non-resident tax, which I've labeled here as local tax. After that, my actual take home was $577. Now here's where it gets strategic. Until July, I was reinvesting all of my dividends into MSTY through DRIP, but recently I decided to switch things up. These YieldMax funds are still relatively new and come with high risk. My concern is that if I keep reinvesting everything and there's a major drop or structural change, I might not recover that value. So starting in July, I've adopted a 50-50 reinvestment strategy where half of my dividends go into long-term ETFs that I am more comfortable with, like SCHD, and the other half stays in YieldMax positions. This way, I'm still compounding both positions, but also slowly building safer reserves. Now let's talk about NAV erosion, because this matters. My average cost per share is pretty high, around $25 per share, and since I've reinvested $483 of my dividends back into MSTY, my total cost basis, which would include my original investment plus DRIP, is now $2,258, but the market value today is closer to $2,035. So while I'm up $260 versus my original investment, I've technically lost $224 worth of reinvested dividends. Now, I'm optimistic that this will rebalance over time and hopefully lead to higher income, but this shows why I'm taking a more cautious approach with how I handle future payouts. The last thing here is my dividend reinvestment log. My most recent payout in July was about $93 after tax. I split this as $50 into ULTY and about $44 into SCHD. That means I've chipped away about 5.3% of my goal to build an SCHD position equal to my original $1,775 investment in MSTY by using YieldMax dividends. My next position in the YieldMax portfolio is NVDY. This one's similar to MSTY in structure, but instead of MicroStrategy, it tracks NVIDIA, a stock known for big price swings. I bought in on February 21st, 2025 with a single $1,000 purchase, and since then I've been reinvesting all the dividends through DRIP, except for the most recent payout in June and the one I'm expecting in July. So far, NVDY has paid me $275 in total dividends. After that non-residence withholding tax, my actual income came to $234. But now let's talk about the NAV erosion. My average cost per share is a little over $20, but the NAV is down to $17.77. So while I'm technically up $44 based on my original $1,000 investment, it doesn't tell the full story. Once you factor in the $200 I've invested back in with dividends, my total cost basis is now about $1,200, and that puts me down $155 on those reinvested dividends alone. So just like MSTY, I'm showing gains on paper, but I've actually lost some of the cash flow I earned due to the falling NAV. That's exactly why I've shifted my approach. Going forward, I'll be splitting NVDY's dividends as well, and I'll be honest, I'm a little less confident in this one right now, which is why I want to be a bit more cautious. For example, I took my June payout of $33 and allocated it straight into SCHD, and I'm taking a similar approach here where I want to build an SCHD position equivalent to the contributions I've made to NVDY, which is going to be funded just by these dividends. With that, I'm about 3.4% towards this goal on this fund. The final position in my YieldMax portfolio is ULTY, and this one's all about consistency. Unlike MSTY and NVDY, this one doesn't just track a single company. Instead, it holds exposure to a rotating basket of 15 to 30 underlying stocks, which are adjusted regularly. That built-in diversification makes this fund a little different and a bit more balanced. This position's been interesting for me. I started with a few smaller buys in June, but on July 11th, I made a big move, adding $1,500 to the position, bringing my total out-of-pocket investment to about $2,016. Just to clarify, I also funneled $50 from MSTY dividend into ULTY early on, but I'm not counting that as part of the book value since it was not new capital. I'm tracking this underneath, just calling it other. So far, ULTY has paid me $39 in dividends, and after that non-residence withholding tax, my net income was $33. They have declared the dividend for this week around 10 cents per share, but I haven't added that into the tracking just yet. Unlike the other two ETFs, I haven't dripped any of this back into ULTY. Instead, I've actually spent it. What stands out about ULTY is the price stability. Right now, the NAV sits around $6.30. Most of my shares were bought around $6.20. Not only has there been no NAV erosion yet, I'm actually sitting on a small gain. I haven't yet received the dividends that reflect my full share count since the July 11th top up, but I'm optimistic about this position as steady income going forward. As for the strategy, I'm still figuring it out. I've used ULTYs for a bit of guilt-free spending, but longer term, I might split them the same way I'm doing with MSTY and NVDY, perhaps half invested into YieldMax and half invested into SCHD or other long-term plays. Finally, here's a summary sheet that brings everything together. You can see all three of my YieldMax positions here with the book value versus the market value, the unrealized gains, and the total dividends I received after tax. At the time of recording, I'm up about $396 in unrealized gains, and I've received just over $844 in post-tax dividends across all three funds. Now, as we've seen, some of those dividends have been eroded when reinvested, especially in MSTY and NVDY, and that's exactly why I'm starting to build a cash reserve in funds I'm more comfortable with and that tend to be a little less volatile. Right now, I've cashed out about $117 in total, which is around 2.4% of my goal to build a more stable base using high yield income. This strategy is evolving and I'm excited to see how it performs over the next few months. I've also seen a few new YieldMax ETFs pop up recently, so I might even start a fourth position using future dividends. If you want to follow along with how this strategy plays out, be sure to subscribe. I'll be posting monthly updates on my results, what I'm learning, and how this dividend funnel is shaping up. Let me know how you track your YieldMax funds, and just a quick reminder, this video is not financial advice. These are high-risk funds, and I'm simply sharing what I'm doing, not what you should do. Make sure to invest based on your own goals and risk tolerance. Thanks for watching, and I'll see you in the next update.